Welcome to the Retirement Wealth Podcast. One of the biggest questions many people face as they near retirement is, should you pay off your mortgage before you retire?
Yeah, that's a really important question, Emily. It's one that can have a significant impact on your financial security in retirement.
Exactly. And today, we're going to dive into that topic, as well as explore some strategies for managing debt and how it fits into your overall retirement plan.
We'll also touch on the benefits and drawbacks of paying off your mortgage early, what factors to consider, and how to balance that with other retirement savings goals.
And, of course, we'll share some real-life examples to help illustrate these points. It's all about making informed decisions as you approach this important phase of life.
Right, and we want listeners to feel empowered. It's not just about crunching numbers. It's about creating a retirement that feels secure and fulfilling.
So let's get started. To kick things off, David, why is the question of paying off a mortgage so crucial for folks planning for retirement? What should they be thinking about?
Emily, when we look at the current economic landscape, it really brings this whole mortgage conversation into sharp focus. So many people are feeling the squeeze of inflation right now. And that can make the idea of a mortgage payment feel even heavier.
Absolutely, David. I think a lot of folks are realizing that every dollar counts more than ever. With prices rising on everything from groceries to gas, the last thing you want is a large monthly payment hanging over your head as you enter retirement.
Exactly. And it's not just inflation, right? The market's been quite volatile lately, which can add another layer of stress. People nearing retirement often have a lot of their savings tied up in the stock market. And any downturn can really shake their confidence.
For sure. I was talking to a couple the other day. They're in their early 60s, and they were worried about how much their savings had dipped. They mentioned that if they had a mortgage still hanging over them, they'd feel even more anxious about their financial future.
That's a common sentiment. I've seen it time and again. The idea of having a mortgage payment in retirement can feel like a ticking clock, especially with market uncertainties. It can really impact how comfortable and secure people feel as they transition into this new phase of life.
And then there's the question of tax efficiency. A lot of people think about the mortgage interest deduction, but with changes in tax laws, it's not as beneficial as it once was for many folks.
Right. Some retirees actually end up not benefiting from that deduction at all if they've transitioned to a standard deduction, which is more common these days. So they might be paying a lot more interest without getting any real tax advantage in return.
And let's not forget about Social Security. With some changes on the horizon, people are looking at their benefits differently. Some retirees might feel they need to rely on their benefits more heavily if they still have that mortgage payment.
That's a really good point. When you're relying on fixed income, managing those monthly expenses becomes crucial. I had a client last week. Let's call them Jim and Lisa. They're both retired, but they're still carrying a mortgage. They told me that they feel their Social Security benefits just barely cover their living expenses, let alone a mortgage payment.
That sounds stressful. I can see how that would weigh on them. And when you add healthcare costs into the mix, it's a lot to juggle.
Oh, absolutely. Healthcare expenses can be a huge unknown. We all know they can skyrocket, and if you're still paying a mortgage on top of that, it can feel like a double whammy.
Right, and that's where the emotional side comes in, too. It's not just about numbers on a balance sheet. It's about peace of mind. Knowing that you own your home outright can bring a sense of security that you just can't put a price on.
Exactly. I often tell my clients that financial security isn't just about having a number in your bank account. It's also about feeling secure in your choices and your future. One of the most rewarding aspects of my job is seeing clients relax and breathe easier once they've paid off their mortgage.
I can imagine. And let's not overlook legacy planning. Many people want to leave something behind for their kids or grandkids. If you still have a mortgage, that could become a burden on your heirs.
Right. If you pass away with a mortgage, your loved ones may have to deal with that debt, and it can complicate their inheritance plans. I had a client who prioritized paying off their mortgage specifically so their children wouldn't have to deal with that stress. They wanted their kids to inherit a home free and clear.
That's such a thoughtful approach. It really highlights how personal these financial decisions can be. And it's not entirely about the numbers. It's about family, legacy, and what you want to leave behind.
Exactly. And I think all of these factors really highlight why thinking about your mortgage before retirement is so crucial right now. With the current economic trends, it's not just about saving. It's about creating a stable foundation for the future.
So if someone is listening right now and feeling the pressure of these considerations, what's the best way for them to start thinking about whether to pay off their mortgage before retirement?
Well, it really starts with understanding their individual situation. We need to look at their overall financial picture, including their income sources, expenses, and how much longer they plan to work.
That makes sense. And I imagine having a solid retirement plan can help clarify these decisions too.
Absolutely. Having a clear strategy can make all the difference. It allows you to weigh the pros and cons of paying off your mortgage against other financial priorities.
And I think that leads us nicely into some core strategies people can consider.
Yeah, let's dive into that. You know, Emily, when it comes to the decision of whether to pay off your mortgage before retirement, there's really no one-size-fits-all answer. It depends on a lot of factors. A big one is your overall financial picture.
Right, like how much savings you have, or what your other debts look like.
Exactly. If someone has a substantial retirement account, like a 401k or an IRA, and they're comfortable with their investment strategy, they might choose to invest those funds instead of paying off their mortgage. The goal is to weigh the interest rate on the mortgage against potential returns in the market.
So if their mortgage rate is, say, 3%, but their investments are historically returning, 7%, it might make sense to keep that mortgage, right?
Yes, precisely. But it's not just about the numbers. There's also peace of mind to consider. Some folks feel more secure knowing they own their home outright, especially in retirement, when income might be tighter.
That's a really good point. I guess it's about balancing that emotional factor with the financial side.
Absolutely. And speaking of financial aspects, let's talk about tax-advantaged accounts. If you're putting extra cash into paying off your mortgage, that money isn't going into a 401k or an IRA, where it could grow tax-deferred.
Right, and those accounts can be a huge part of a retirement strategy, especially with compounding growth over time.
Exactly. And if you're under 50, you can contribute up to $20, $500 to a 401k as of 2023. And if you're over 50, there's a catch-up contribution of an extra $6, $500. So that's a substantial amount of money that could be growing for you.
Wow, when you put it that way, it really emphasizes the importance of maximizing those contributions, especially before retirement.
Yes, and don't forget about IRAs. With a traditional IRA, you can contribute up to $6, $500, or $7, $500 if you're over 50. It's really about leveraging those accounts to build a robust retirement fund.
And then there's the Roth IRA, which is also a great tool for tax-free growth and withdrawals in retirement.
Exactly. If you think your tax bracket will be higher in retirement, a Roth can be particularly advantageous. You pay taxes on the money before you contribute, but then all withdrawals are tax-free, which can be a huge benefit.
So if someone's considering paying off their mortgage, they might want to look at their tax situation too.
Yes, you want to consider how you'll withdraw funds in retirement. You mentioned the 4% rule earlier. It's a general guideline for how much you can withdraw from your retirement savings each year without running out of money.
So if you have $1 million saved, you could withdraw about $40,000 a year?
Correct. But it's important to remember that this rule is based on historical market performance and may not hold up in all situations. Markets can be volatile, so having a strategy that considers different scenarios is crucial.
That makes sense. And I guess that's where withdrawal strategies come into play, like the bucket strategy.
Exactly. With the bucket strategy, you divide your investments into different buckets based on when you'll need to access the money. For example, one bucket for short-term needs, maybe cash or bonds for the first few years of retirement, and then another bucket for longer-term investments like stocks.
So it's kind of like having a plan for both immediate needs and long-term growth?
You got it. And it can help reduce the stress of market fluctuations during the early years of retirement, which can be critical.
Speaking of stress, what about Social Security optimization? I've heard that's a huge part of retirement planning too.
It really is. The age at which you decide to start taking Social Security can significantly impact your overall retirement income. If you wait until your full retirement age, you get your full benefit, but you can boost that even more if you delay it until age 70.
So if someone is in good health and can afford to wait, that could lead to a larger monthly check later on?
Yes, exactly. It's all about calculating the break-even point. If you take it early, you'll get less each month, but you'll start receiving it sooner. Conversely, if you wait, you'll get more. But it's a game of patience.
Such an important thing to consider, especially if someone's trying to decide whether to pay off their mortgage first or optimize their Social Security benefits.
Absolutely. And that ties back into asset allocation as well. If someone has a lower risk tolerance, they might opt for more bonds or income-generating investments, which can provide stability and help cover living expenses, including mortgage payments.
So a balanced portfolio might lean more heavily on bonds as they approach retirement?
Precisely. A common rule of thumb is the 100 minus your age strategy. So if you're 60, ideally, about 40% of your portfolio could be in stocks, with the rest in bonds and cash. This helps manage risk as you get closer to needing those funds.
And what about diversification? That's something I hear a lot about too.
Right. Diversification is key to managing risk. It's about not putting all your eggs in one basket. By spreading investments across different asset classes, stocks, bonds, real estate, you can reduce the impact of a poor performing investment.
And real estate can be a big part of that, especially if you're thinking about rental properties or even downsizing.
Definitely. Rental properties can provide a stream of income in retirement, and if you downsize, you might free up cash, which can then be invested for further growth.
It's all interconnected, isn't it? You really have to consider each piece of the puzzle.
Yes, it all works together, but it's also important to avoid common pitfalls, like underestimating expenses in retirement or not having a plan for healthcare costs.
Oh, that's a big one. Healthcare can really add up, can't it?
Exactly. We'll dive into that next, but for now, I think we've covered a lot of ground on the mortgage question.
Definitely. It's a lot to think about, but it's such an important part of retirement planning.
So, Emily, as we dive deeper into this topic of paying off your mortgage before retirement, there are definitely some common pitfalls that people can fall into.
Right, and it's so important to talk about those. I think one of the biggest mistakes I see is the sequence of returns risk.
Absolutely. When folks retire, they often rely on their investment portfolio to generate income. If the market takes a downturn right after they retire and they start withdrawing funds, it can really hurt their long-term financial health.
Yeah, I've heard stories of retirees who were just hit hard by this. Like one couple I know, they retired in 2008, right when the market crashed. Their portfolio took a dive, and they had to pull money out to live on.
Exactly, and what happens is, if you're selling investments at a loss to cover your expenses, you're effectively locking in those losses. It can take years to recover, and that can really put a strain on your retirement plan.
So what do you recommend? How can someone avoid this?
One strategy is to have a diversified portfolio and keep enough cash or liquid assets on hand to cover your essential expenses for a few years. That way, you're not forced to sell in a down market.
That makes sense. And what about taxes? I think people often overlook how taxes can impact their withdrawals in retirement.
Oh, definitely. Many retirees don't fully consider the tax implications of their withdrawals. For example, if you're withdrawing from a traditional IRA, those funds are taxed as ordinary income.
Right, and if you're not careful, you could end up in a higher tax bracket than you expected, which is just not ideal.
Exactly. I had a client who was so focused on drawing from their IRA that they didn't realize it pushed them into a higher tax bracket, which affected their Social Security benefits too.
Wow, that's tough. So what would you suggest for someone trying to manage that?
It's all about planning ahead. Working with a financial advisor can help you strategize your withdrawals to minimize taxes. For instance, you might want to consider taking some funds from taxable accounts first, or doing conversions to a Roth IRA when your income is lower.
That sounds smart. Now, what about healthcare? I feel like that can really throw a wrench in someone's retirement plans if they're not prepared.
Oh, absolutely. Many people underestimate their healthcare costs in retirement. With rising medical expenses and the potential for long-term care, it can really add up.
I remember reading about a couple who thought they'd be fine with Medicare alone, but then their out-of-pocket costs were way higher than they anticipated.
Yes, and that's a common scenario. It's wise to plan for these costs. maybe setting up a health savings account if you're eligible, or looking into long-term care insurance.
Right, and speaking of planning, let's not forget about longevity. People are living longer, and that can really stretch your retirement savings.
Exactly. I had a client who retired at 65, thinking they would be fine for about 20 years. But now they're 90 and facing some tough choices. They didn't plan for that longevity risk, and it's concerning.
So how can someone start to think about that?
Well, it's crucial to consider your life expectancy and plan for potentially 30 years in retirement. You might want to create a flexible withdrawal strategy that adjusts based on your age, health, and market conditions.
That's smart. And what about asset allocation? I've heard that can really make a difference too.
Yes, it can. Many retirees get too conservative with their investments too quickly. They think they should move everything into bonds or cash.
And that can backfire, right?
Exactly. If inflation rises and you're not keeping up with it, your purchasing power diminishes. A balanced portfolio that includes some growth investments can be key to maintaining your lifestyle.
I can see that. And then there's the Social Security piece. Claiming benefits too early can be another big mistake, right?
Definitely. I've seen people claim Social Security at 62, thinking they'll get more money in the long run, only to find out that their monthly benefit was significantly reduced.
That's a tough lesson to learn. So what's the best way to approach that?
It's typically beneficial to delay claiming until at least your full retirement age, or even longer if you can afford it. Each year you delay can increase your benefits substantially.
So patience can really pay off in that case.
For sure. And it's all about what fits your personal situation. Have a solid plan and don't rush into decisions without considering the long-term effects.
Those red flags can sometimes be hard to spot, especially when you're in the thick of planning.
Exactly. If you're feeling uncertain or overwhelmed, that's a red flag. It's a sign to seek advice or get a second opinion on your retirement strategy.
Yeah, and talking to someone who can help you navigate these decisions can be a game changer.
That's right. And remember, it's never too late to make adjustments to your plan. The earlier you can identify these pitfalls, the better equipped you'll be to tackle them head on.
Well, I think we've covered a lot of ground here. What would you say are the next steps someone should take if they're worried about these issues?
I'd recommend starting with a comprehensive review of your financial situation. Look at your expenses, your income sources, and your asset allocation. And don't hesitate to reach out for professional guidance if you need it. You can absolutely build a plan that works for you.
Great advice. This is such an important conversation for anyone heading into retirement or already in it.
Absolutely. It's all about making informed decisions that align with your personal goals and ensuring you're prepared for whatever comes your way.
Well, that gives us a lot to think about. Let's wrap this up, shall we?
So let's talk about some immediate steps that listeners can take right now, Emily.
Absolutely. It's all about taking action, right?
Exactly. First off, if you're unsure about your mortgage situation, one of the best places to start is by assessing your current financial picture. You can do this using online retirement calculators.
Right. Vanguard, Fidelity, and Charles Schwab all have great tools that can help you run the numbers.
Yeah, and these calculators can give you insights into how paying off your mortgage might impact your overall retirement strategy.
And if you're thinking about your Social Security options, going to SSA.gov is a must. You can check your benefits and see how they fit into your retirement plan.
For sure. And don't forget about tax implications. Using tax software can help you understand how your mortgage interest deduction plays into your overall tax strategy as you transition into retirement.
That's a good point. It's important to understand how different elements of your financial life interact with one another.
Right. And if you haven't already, setting up a habit of reviewing your portfolio at least quarterly can really make a difference.
Totally. It doesn't have to be a huge time commitment, just a simple check-in to see if you're on track or if you need to make adjustments.
And running retirement projections can give you a clearer picture of where you stand. There are apps like Personal Capital or Mint that can help you track your expenses and see how they align with your retirement goals.
Yeah, and those tools are so user-friendly. It can be really empowering to visualize your financial future.
Absolutely. And speaking of empowerment, I think it's also valuable to educate yourself through books and podcasts focused on retirement planning.
Oh yes, there are some great resources out there. Books like The Boglehead's Guide to Retirement Planning or Your Money Ratios are really informative.
And don't forget podcasts. There are so many out there dedicated to retirement strategies. It's a great way to learn while you're on the go.
Exactly. And if you're ever feeling overwhelmed, just remember, it's never too late to improve your financial plan.
That's the spirit. Even small changes can make a big difference over time.
So true. Starting with small, manageable habits can lead to significant improvements.
Right, and if you're feeling stuck, it's a good idea to consult a financial advisor who can provide personalized advice based on your specific situation.
Yes, having that professional perspective can really help clarify things and keep you on track.
And don't hesitate to ask questions, whether it's with your advisor or in online forums. Engaging with a community can provide support and additional insights.
That's a great reminder. You're not alone in this journey, and there's a wealth of knowledge out there.
Absolutely. And as you take these steps, remember to stay flexible. Life changes, and so might your plans.
Right. Adjusting as needed is key to staying on course.
So those are some practical first steps. Now let's bring this all together. Well, Emily, as we wrap up today's discussion, I think it's important to highlight a few key takeaways for our listeners.
Absolutely, David. So first off, we talked about how paying off your mortgage before retirement can bring peace of mind, right? That reduced monthly expense can really help ease financial stress.
Exactly. And the second point was about the interest rates. If you have a low-rate mortgage, it might make more sense to invest your money elsewhere for potentially higher returns rather than paying off that mortgage early.
Right. And we also touched on the importance of considering your overall financial picture. Building an emergency fund and ensuring you have enough saved for retirement can be just as critical as paying off your home.
Definitely, Emily. And let's not forget about the potential tax benefits of mortgage interest. For some, that can be a significant factor in deciding whether to pay off a mortgage or not.
So true. And, it really comes down to personal circumstances. Every listener is in a unique situation, so it's essential to weigh all these factors carefully.
That's the key takeaway, isn't it? Tailoring your strategy to fit your own financial goals and lifestyle is crucial.
Well, as we close out, remember that building and protecting your retirement wealth is a journey, not a sprint. It takes thoughtful planning and sometimes a bit of patience.
Absolutely. And if something resonated with you today, or if you have questions, we'd love to hear from you.
Yes, please like and subscribe to the podcast. And don't forget to comment with your biggest takeaway or any questions you might have.
And if you know someone who's planning for retirement or is already retired, share this episode with them. It might really help.
Next time, we'll dive into a topic many are curious about: when to start Social Security for maximum benefit.
It's going to be a great conversation, so don't miss it.
Until then, take care and keep planning for that dream retirement.
Bye for now.
Bye!